What's going on, guys? Welcome to the first lecture of 2024. Now, we're going to start 2024 off with some baby steps. Now, this is going to be useful for everybody, whether you know how to use the swing range principle or you're brand new to it and you're just learning it through either the Discord or the content on the YouTube. We are just going to be talking about the principle of swing ranges, how they're used, why we use them, and then some very simple applications that you can apply to them to make them even simpler than they already are, because of course we generally factor in for more precision based entries when it comes to the swing ranges, but there is also other options that you can explore and use while still keeping within the parameters and rule set that we have applied. So, as the title says, swing ranges, how you can utilize their principles. That is a very easy way to sum up what we're about to show you now. So, if you are new to this system and you don't understand maybe the swing range principles or the 5-minute order flow principles, or there's any points in this video you don't understand, best thing you can do is go back and watch the previous videos that we've uploaded to our YouTube, as they will contain the context that you need to understand. So, first things first, what is a swing range? Now, for anyone that understands 5-minute order flow principle, you'll know what a swing range is. We're not going to spend a whole lot of time talking about what a swing range is. We're going to talk about more about how you can utilize them and begin to integrate them, whether you actually trade them, whether you use them as a bias, whether you use them as parameters to look for certain things, or whether you use them as targets and invalidations. It's going to be down to you, essentially, how you decide to use them. Of course, we like to trade them as what they are, which is ranges. We like to establish good points within those ranges to then trade. So a swing range itself is where we have a 5-minute order flow delivering into a bearish movement, then delivering into a bullish movement. Again, pretty simple. If you don't understand this, like I say, go and check out our other previous videos and you will be able to understand exactly what we're talking about and how we can use these. Okay. So very, very simple right here. This is the diagram of a swing range, and you can see there is 2 points here that we need to be focusing on. One of them is the low, as within this scenario, which is bullish, that is going to be our protected point, and this high within this bullish scenario is going to be our target. Now, generally, we will look to locate an area of precision to enter. So this is going to be an extreme order block or a liquid low or something along those lines. The first thing we need to do is obviously establish where our range parameters go to and from. And we can do this by locating where the counter breaks are within the 5-minute order flow. So the counter breaks being the first break against the pre-established order flow, delivering a manipulation point, aka a swing high or a swing low. Now, as I stated earlier, we will generally look for a point of liquidity, for example, or a point of unmitigated price, which will deliver to us, hopefully, an order flow shift in the higher time frame direction. Now, you don't have to do this. Okay, you don't have to do this. There is some very simple things that you can do to trade these ranges. Now, of course, you have to look at a swing range as a range, as that's what it is. You may have lower time frame order flow dictating to you a current trend within the market. So, for example, you can see here that the trend was bullish, clearly creating new highs, higher lows, and consistently moving higher throughout the market, taking out more than likely higher time frame targets, and so on. We then have a new move which establishes a bearish movement within the 5-minute order flow. Okay, which is fine. You can trade these 5-minute order flows if you're more preferable to lower time frame trading. It's completely fine. But we like to focus on the ranges and how they provide generally a higher time frame perspective, with the 5-minute order flow as the forefront and the overall cue as to where these points are. So the main principle we need to focus on is, where are we looking to act within this range? Now, the main point within this is keeping in mind that yes, it may not be the direct range that price is traveling within. Talking about, of course, the 5-minute principle. So the range that the price is currently in here would be this low and this high. So we'd expect price to continue down, right? just as you would. But if you do not want to trade the 5-minute order flow, as we've discussed, you are looking to trade higher time frame, which gives you your manipulation point low and your manipulation point high, establishing you a clear range. Now, the very first thing that you should always learn about any range is that you want to buy in the most preferable place, or you want to sell in the most preferable place. So how do we determine this? Well, it's very, very simple. We want to look for the 50% of this range to be met. Now, there's a couple reasons why we look for this. Number one, because it would be classed as a discount or premium within a range. So this is where institutes are going to look to accumulate or distribute orders depending on the direction of the order flow itself. Mainly, we are looking for, in this case, a bullish movement. So we want to assure that price has traveled back into the lower 50%. Okay, so very, very simple. The lower 50% gives you a higher probability of price continuing that higher time frame order flow, and it is most likely going to meet an area of unmitigated price or an hourly order block, something along those lines. Okay, now we're not focusing on using order blocks to trade within the ranges or any of those kind of things. We're purely showing you the principles that you can apply within this to get a good understanding. Okay, so once we've established, okay, we need to see price drop below the 50%, we can then begin to bring something in that you are all going to be familiar with, which is a percentage pullback, otherwise known as a fib tool with specific measurements added in to it. Now, in this case, the fib tool that I'm using has a 50% line, which you can see right here, has a 61% line, which you can see right here, and then a 78% line, which you can see right here. Now, if you have learned how to read swing ranges and you can read 5-minute order flow efficiently without making mistakes, which can be sometimes harder than you think, as price can move in very, not confusing, but very choppy and unclear directions sometimes, we must assure that we are sure of the range that we are in before we start trading it, okay? Now, the main principle with this is if you understand the way that swings work, you will also know that the probability of a swing range working in the favor and direction of the range is also very high. Of course, we've spoke about this before in previous videos, but fundamental effects and certain times of the year are going to affect the probability of a swing range. But most of the time, you're looking between a 70 to 85% probability that the range will shift in the direction that you have established, in this case, bullish. Now, this overall fib tool is used very commonly in the Forex market, and it's used very commonly through the retail sentiment and the retail traders. It's used within ICT, support resistance, kind of every single element of trading. You will see the fib tool appear at some stage. So it's no different here. Now, in this case, we are talking about a simplified way of using the overall range without having to deep dive in. So essentially all you're going to need to do is wait for the swing high to be established, swing low to be established, and you can work within those two parameters without really having to take a deep dive into lower time frame price action, which I know some people struggle with because it is very noisy compared to some of the higher time frames. So the main reason I have the 50%, 61 and 78 is because, again, if you've seen the fib tool before, you will know that the 61, 78 is a very good and very common point for price to reverse and continue in the direction of the pre-established range. Now, the one point that I will really make within this is that the fib tool can be used at any point within price. Literally any point, the fib tool can be pulled out and applied, and you can trade based off of that. Now, it's the points that you're applying and measuring within this fib range that is going to determine the likelihood of it working. Now, because we have a pre-established notion and we already have a bias delivered by our swing range, we already have a pretty strong idea that price is going to continue to travel in the direction we've already depicted. So based off of that, applying the fib tool to these 2 points gives us even more probability that the range will consistently deliver to us. So based off of this, we can simply wait for our swing high to form, swing low to form, as stated earlier. We can then establish where our 50% is, which again is here, it's very easy. Once we are below this point, we can begin to look for areas to buy price from. Now again, as stated earlier, we have a very consistent directional bias within the swing narrative. We also have a realistically good area to buy from within this range because we're in the lower 50%. So that's already two confluences that are backing up our idea, and we also have an area for our stop loss to resign, and we have an area for our target to resign. Now this is very, very simple. Now of course we're going to go into some other methods of how you can add even more confluence to this and even refine your entries to get better risk reward. But for now, we're just going to simply look at if you have clear directional bias, which we do. We have a clear structural narrative for the low, which we do, and you have a clear structural narrative for the high, which we do. You can pretty much jump straight in at these fib levels. Again, this is going to be down to your own discretion, and I do not encourage anybody to risk more than 1% across any kind of trading entry, whether it's within a swing range, whether it's within 5-minute range, whatever it may be. I would generally stick to 1% or less. This is going to mitigate your risk hugely, and it allows you to take many more losses without essentially collapsing your account. Also, really focusing in on the fact that taking 1 or 2 losses, 3 losses, 4 losses in a row is not going to change the probability of any system. It just changes the probability of you acting emotionally. So always remember that. Keep that at the forefront of your mind. The emotions are what is going to drive you to act differently within these ranges. So main principle is you don't always see a pullback. The one thing I've always said to any single person that has either learnt from me or has been mentored, or whether it's whether your Discord, YouTube Live, whatever it may be, the one thing that is not guaranteed within the range or within a trend, is the pullback. Okay, so we can't guarantee price is going to come to this 78. We can't guarantee price is going to come to the 61. We can't even guarantee price is going to come to the 50. We may just see price go straight up and out, which does happen sometimes. Again, in another video, we're going to go in detail as to why that may happen and how you can anticipate price action not delivering in that direction. So the main principle here is that we're going to focus on being able to trade these ranges without having to take a deep dive into lower time frame price action. So right here, you can see we have an order set up on the 78 and an order set up on the 61%. Now, generally, I would say to you, split a position across here. Worst case scenario is price comes down, it does not react, and we have a complete shift in higher time frame order flow, mid time frame order flow and lower time frame order flow, giving you essentially a bias shift, which is only going to happen every so often. It doesn't happen all the time. So from here, we can essentially set these orders, giving a small amount of space at the swing low, remembering that the A and B models that we use within these ranges still apply, so we could easily see price come down, liquidate, take your shift point and deliver an entry based off of that, but that's more of a precision entry. Mainly though, you will see price pull back within these ranges and shift taking the swing high pretty consistently. Okay, so that is the most raw and basic way that you can begin to use these swing ranges. Now, there are ways of adding confluence to this, and we're going to go into that now. So the number one thing is obviously applying some of the more intricate elements of price into the same rule and same narrative that we've just spoke about. Now, that principle is pretty simple. Again, if you are confused about any of these points, make sure you check out the other videos we have uploaded, or you join the Discord community and hit up some of our experienced members, or give me a message myself. It's exactly, it's whatever you want to do. It's exactly down to you how you go around this. Now, we're not going to be changing much here. The same principle is going to apply. We're still using the fib tool because, again, we're keeping it as simple as possible. But in this case, we're going to look at what resigns around these levels. Now, the 71% being the better entry point, and of course, you'll have an extreme order block, which will be the best entry point. But we know that price doesn't always get down to these levels. So what we're looking for between the 61 and 78, also below, you can look below, is we're looking for, wait for it, you could probably already guess, imbalances, unmitigated order block, high liquid lows in this case, would be high liquid highs if you were looking within a bearish range. And we're going to look to refine our entries based off of that. Again, this does not mean that you'd have to highlight somewhere like this, for example, set an alert, wait for a 1 minute, wait for this, wait for that, enter, put your stop loss, so. The same thing is going to apply. The only difference is you will set your limit at that point, okay? So let's just say we have this liquid low and then you have an order block that resides right here. Okay, just change that to green. You can then say to yourself, well, actually, I'm not going to put my secondary entry at the 78. I'm actually going to bring it down to this order block here, because if we're seeing this, we're liquidating the lowest liquid point within this range. We're mitigating 90% of the order blocks, and my stop loss is in the same place, expecting price to deliver to the same target. Now you can see already that this has already increased the RR by almost 0.5%, which can be a big difference if you're looking at splitting a position across multiple during a swing range. So, what is the ideal for any range? The ideal for any range is to locate what we just said here, which is order blocks and liquidity, and then combine them together to refine an entry down to something more along the lines of this, which gives you a much higher RR. But of course, there's always the risk of a rogue liquidation coming in, taking you out, and then price continuing in the range direction as predicted. This can happen. And this is why I say this is not the ideal way of trading unless you are experienced and you understand the probabilities within the range itself. Okay. So, main principles to focus on. The main key elements within any swing range is it gives you a higher time frame bias with lower time frame order flow. That in itself is a very powerful tool. It also gives you an invalidation for your stop loss to go. It also gives you a swing high, which would be your target, and it will give you more than 1 point of entry within the range. So collectively, you will have a plethora of confluences that you can use at any one time. Not forgetting the volume, not forgetting the sessions, not forgetting the 5-minute order flow structure within the range, not forgetting the supply and demand failure areas within range, many other things you can add in which are more precise, which could give you a much better risk reward. But as simple terms go, this is as easy as it gets when it comes to finding the entry essentially for these ranges. Now, by all means, this is not a guaranteed 100% of the time you're going to get an entry. There is always going to be a probability of a loss. Okay, so remember, if you're following swing range structure and you are tracking this to a good consistent basis, you should be able to trade these elements pretty easily. Now, of course, if the swing ranges do not meet the tradable criteria, then you will have to refrain from trading them. Now, of course, we are going to release a video talking about the invalidations of a swing range in much higher detail than we have previously. But for now, we need to focus on the two key principles of invalidated swing ranges. The two key principles are swing high, not be informed above the 50% of the range. So right here we have a counter break which forms in the upper 50% of the range. Okay, you can see this is the 50% line. The break structure occurs here, which means this swing high forms above the 50%. We know that this is a valid swing range because we have created our structure point high, our structure point low. Then the rest of the elements just need to line up within that. The secondary point to focus on when it comes to invalidation is if we have no unmitigated price action. Let's say all of the order blocks have mitigated, everything, for example, has fulfilled, and there's no points to reference off of, we have no liquid points within here, everything's been mitigated. Again, that tells you there's a high probability this range may fail. If you have tried to learn any of the systems that we have put onto YouTube and spoke about in depth and you have struggled, make sure that you drop us a comment or you join the Discord, message me myself or any of our students. And as always, guys, if you have found this video useful, then please do hit that like button and of course hit that subscribe button, and I'll catch you all in the next one. Peace.